Everyone, how are we going? So my name is Kate and I'm the digital marketing specialist for ePocket. I'm just going to be introducing you guys to Blake and Papa, who will be running tonight's webinar. They would be discussing pretty much how cryptocurrency has created a new financial system and the challenges and advantages of that. I'll pass you over to Puppy now.
Good evening, everyone. How is everyone going? Okay, so my name is Papa, and I'm in charge of the operation at ePocket. And today, our main topic will be the cryptocurrency and the birth of a new financial system. So, for today's meeting, the main agenda will be we'll talk a little bit about cryptocurrency and the way it has redefined the future of finance. We'll talk about the evolution of cryptocurrency, all the advantages, which comes as well with challenges, and the real value of cryptocurrency before diving into the big picture, what really cryptocurrency entails and what it brings to our society at the moment. And at the end, we will have a question and feedback. If you have any questions or anything that comes in your mind that you would like us to really express, so we'll be able to answer those questions. Now, the way it's with blockchain and cryptocurrencies and new technologies, the way it redefined the future of finance. The history of how it disrupts our society and how it impacts as well the future of finance. And we have heard about cryptocurrency, and we have understood throughout these years that it's an investment. And being a financial investment as well, comes as well with a decentralized aspect, as with finance and all those other area where blockchain technology and finance have impacted really our society. Now, let's dive into the evolution of cryptocurrency. So from the, I hope that everyone have heard of Satoshi Nakamoto. So he has written a white paper in 2009, which really describes exactly the whole technology, how it works. And Satoshi has mined as well the first Bitcoin on a decentralized network in 2009. 2010, there was another, Laszlo Isaac. He bought 2 pizzas for $10,000 for 10,000 BTC, which were at the time was $41. Just remember the price at that time in 2010, because later on throughout the exposure, you'll see exactly how the price has fluctuated and where it gets at. So in 2011, there was an open source altcoin. So that was the first altcoin really which was born and launched in 2011. His characteristic was that it was much more enabling a speedy transaction on the blockchain. In 2012, we saw the birth of Ripple, which in 2012. And 2013, we had another milestone as well, because Bitcoin reaches $1,000 US. 2015, another important one came around. It's Ethereum. A lot of altcoins are based on Ethereum in a sense, and it has really open smart contract aspect, which a lot of those altcoins derive, and a lot of applications have derived from it, like the voting system, for instance, and Power Ledger. We have heard about people managing a lot of things with Power Ledger as well. So it has really enlarged the ecosystem to more projects to really be built and prosper from there. In 2017, we got another main milestone as well, with the price of Bitcoin reaching 10,000 US. 2018, it was a florism of ICOs. A lot of projects came about, and we counted about 1,000 cryptocurrency listed on the exchanges, and yeah, so there was quite a lot of projects that came about in 2018. And now in 2021, the price has reached another big milestone, which is 50,000. Okay, and you remember the pizzas I was mentioning that the person purchased, Lazio purchased at 10,000 BTC. Those pizzas was now $470 million US. So to tell you how really we've progressed from 2010 until nowadays, within 10 years, and how really the evolution has significantly got to this point. Now we will discuss about the advantage of cryptocurrency. So we're going to mention first the peer-to-peer transaction and the low transaction fees that it has brought into the market, into the system. The impact on international trade, and another important aspect of cryptocurrency, which is confidentiality of the parties, as well as the individual ownership that Bitcoin is building. So to talk about the peer-to-peer transaction on the blockchain, the transaction itself doesn't require any third-party involvement. The technology by itself really enables all the transactions to occur within the blockchain without any third party. With the impact on the transaction fee, compared to, for instance, if you go to the bank, having to pay some fees for each transaction, blockchain itself and cryptocurrency require just a minimum mining fee for the transaction to occur. So you don't need quite a lot to make a transaction using the blockchain. Now, when it comes to international trade as well, in the past with the banks and other different financial institutions, we've witnessed, for instance, a lot of high interest rate, exchange rate, and a lot of, the time as well that the transaction occurred has really significantly, were really some hurt to really how e-commerce and commerce was evolving throughout the years. Now, with cryptocurrency, we have and blockchain in particular, we have noticed really a reduction of all those challenges that we have encountered throughout these years. Now, happy with one of these aspects coming, which is confidentiality. When you do a transaction on the blockchain, usually it just addresses. People are sending, initiating transaction from one address to another. All comes long alphanumeric characters that people use to do the transaction, meaning that your privacy is protected because nobody knows exactly who's doing the transaction. Obviously, there is the IP address and all the stuff. If you want to investigate where a transaction comes from, all those aspects can be later on if there is crime involved or anything like that. But just looking at the blockchain, you can't, each person really can keep the confidentiality intact while doing the transaction using the blockchain. Now, the last aspect with the advantage that I will mention will be the ownership. In other words, once we have, for instance, some assets in cryptocurrency and Bitcoin in particular, unless you give someone else your private key, no one can access those funds. Okay, so you are the only person really who keep ownership of your funds, and you can keep it secure. And it's really, unless you give those information out, no one else can access those funds. Now, with always opportunities, there are challenges as well. Now, crypto is not, so crypto comes as well with challenges. So the first one I will mention is the no replacement of a private key. The private key is very important in a sense where once, okay, on the blockchain, for instance, it's similar to a password that you have. It's like a usually it's quite a long numbers. People use password as well with different application deriving from the blockchain. But we need to keep it secure in a sense where when you lose the private key, that's it. You can't access those funds anymore. Yeah. So anybody else can access your fund only if that private key is given away. Now, the other challenge as well is the liquidity. And that is where, for instance, our product ePocket has really come and really focus a lot in that liquidity, because all those exchanges don't have sometimes access to all the liquidity that they need to be able to fulfill those transactions. Because on those exchanges, there is always a buy and sell. People try to buy coins and sell coins, and it's not always that all those assets are available. So you need a big market where you can access all those coins and really allow people to come in and trade. ePocket, for instance, have access to different liquidity pool where you can source all those coins and enable you to transact in real time and access all those coins, buying or selling them in real time with a minimal waiting time. It's straight away. So I invite you to get to our platform to really witness how your transaction can be very quick and fulfilled. Any conditional orders can be fulfilled very quickly. Now, the other good aspect and important as well will be the security. Okay, as we know, with cryptocurrency, the private key, like I mentioned earlier, is the most important thing. So once the private key is secure, you shouldn't have any problem. But now, as Bitcoin and cryptocurrency, all that technology is based on internet. People access the internet, even on the device, services, the internet that you use to be able to access it. It comes with making sure that really your device is secure, that no one has access to it. Okay, and your wallets and things like that, making sure that it's secure, because people can use malware, for instance, to enter a device and record, for instance, the way you are entering your private key. So that's the only way really it can happen, that the security is breached. But blockchain, cryptocurrency, and Bitcoin in general, the way the transaction happen is a very secure one. So unless really now, through the channels that you're utilizing, you give out this information, it's the only way really that you can people can access your fund and your assets in general that you store. Now, the last aspect I will mention about these challenges with cryptocurrency will be the no refund policy, because and that one of the main characteristic attribute of blockchain and cryptocurrency. Okay, once the transaction is initiated, there is no way we can stop it. So there is a key of confirmation along the line with the mining process that happen. That's why always users need to make sure that they double check those addresses where they send this information, where they send those assets. Doesn't matter if it's Bitcoin, Ethereum, or even our own coin, EPT. So you just have to make sure that those addresses are correct before you do the transaction. Because anything that goes, unless the other party accepts to reverse send you back those assets that you've sent, there's no way the transaction can be reversed. Now, what I will do, I will pass you on to Blake, my colleague, who dive into the real value of cryptocurrency and all the different payment method, value storage, and stable coins as well. Give you more explanation about that. Okay, and later on we'll jump into the FAQ and answer any questions that you have. All right, thanks.
That was very insightful. Guys, I'm just gonna dive a little deeper and actually just expand on what Puppy was talking about there. So I'm actually going to start in that little central panel in the middle of the slide there and talk about Bitcoin and lots of other cryptocurrencies really as a store of value. So why can we use Bitcoin as a store of value? I mean, most people know that the price is ridiculously high, somewhere around $50,000, but they don't actually understand why it's so valuable. And I'm going to tell you that now. So you may have heard the idea of Bitcoin being quite similar to gold. But the reason for that is often overlooked. So basically, the reason it is so similar to gold is because it shares a lot of the same characteristics with gold. One of which being that it's easily divisible, another one being that basically that means you can break it down into smaller pieces and it won't really lose its value. Another reason, is that Bitcoin is so good as a store of value is because it's not easily replicable. So not only can you not replicate it, but it's actually physically impossible to forge another Bitcoin. And thirdly, Bitcoin is also finite. So it's a limited resource. And that basically means that once the 21 million Bitcoins that were originally in Satoshi Nakamoto's white paper are released, that is the number of Bitcoins that will ever be in circulation. And after that, the only real way to buy Bitcoin will be off someone else. And if you're buying Bitcoin off someone else, then realistically, they have the ability to determine the price. So kind of in the same sense that gold, there's not an unlimited amount of gold in the world. There's also not an unlimited amount of Bitcoin. Some people say that it's actually better as a store of value than gold because you can actually transfer it immediately. So you can move Bitcoin from one place to another within minutes, whereas gold, being a physical asset, is much harder to move around. So yeah, that's basically Bitcoin as a way to store value and why it is so valuable and why people say that it's akin to gold. By way of payments, most people don't really understand why or how they pay someone in Bitcoin. And that is something that the people should understand, because if they're investing in Bitcoin, it means they believe that the idea of Bitcoin is a good thing and that it should be going up in price, but they don't really understand why, in the sense that, hold on, who's actually going to be using Bitcoin going into the future? So basically, the way one would actually use Bitcoin payments is if they were a large institution, for example, right? So something like Bitcoin, its price remains consistent irrespective of which country you're in, right? And so if you're, and this is a recent example, if you're a company like Tesla, who's a multinational company, and they're going to be bargaining and also buying off companies in other countries for various components in their cars and whatever. And obviously, they recently bought $1.5 billion of Bitcoin. If they're going to be doing those things and they need a liquid asset, which means that they need to be able to send it to people in order to send them funds really quickly. And they also need to make sure that it's not subject to things like inflation, which something like the US dollar is subject to because it's controlled by a central bank. And it's also just the practical sense of, let's say, for example, you were a big company and you wanted to transfer $100 million or even $1 billion to someone, and it's 1 a.m. on a Sunday, right? But this needs to be done. Firstly, if you just wanted to transfer funds like that regularly, you wouldn't be able to, because at 1 a.m. on a Sunday, the bank is closed, which means they can't facilitate that transaction or validate it. On the other hand, with cryptocurrency, the blockchain is open 24 hours a day. and everything's automated within that, and it's validated by individual computers in a synchronized network. That synchronized network has what's called nodes on it. So each transaction that's validated or moved throughout the blockchain will be sort of stored on hundreds of thousands of computers around the world. So yeah, that's one aspect of why you wouldn't be able to transfer that kind of money and why you might need to transfer that kind of money. Another thing is, if a company is transferring that amount of money, the thing we have to remember is a bank may not even have something like $1 billion in their cash reserves. So they may just simply not be able to transfer that amount of money because they don't possess that amount of money at the point in time in which they're trying to transfer it. And also, when you're transferring that kind of money in that shorter space of time, you're going to be hit with things like early access penalties, super big commissions, and like fairly crappy exchange rates, because I mean you're taking let's say Australian dollars and transferring them to the US. There's going to be some sort of charge in the middle there, transferring it from Australian to US. And the third or fourth, I'm not sure which one we're up to, but another reason why the crypto may present utility in this area is because crypto can happen within a matter of minutes. That transfer will happen usually in around 10 minutes or so, whereas an international bank transfer could take hours or even days in order for that transaction to be validated and moved along. In terms of a user perspective of cryptocurrency, there are a lot of cryptos which are called stablecoins, and so you may notice that Bitcoin and stuff like that is quite volatile. You see the value fluctuating over time quite drastically, but stablecoins are designed to prevent that from happening, right? So a stablecoin is basically a coin that is pegged, or in other words, attached to or tethered to in some way, some other economic or basket of goods or commodity or other currency. So for example, it may be attached to the Australian dollar. So ePocket, ourselves, we have our own currency called EPT, ePocket token. Now that's a pegged currency, or in other words, it's a stable coin. And what that means is that its value will remain consistent with the value of the Australian dollar, so long as there's an outstanding supply of stable coins in that pool of money. So yeah, not only can it be used by big institutional investors and companies, but it can also be used by private individuals who want to take advantage of all of those same perks of cryptocurrency, like the quick transfers, the low transfer fees, all of that, but with a little more another element of stability. Also, you have digital ownership. And I'll actually just skip to the next slide because we have a bit of a better graphic there. Okay, so basically, a huge aspect of Bitcoin and other cryptocurrencies in general is privacy. So even though the blockchain, which is obviously once again that big decentralized ledger on which Bitcoin transactions can actually flow through, right? Despite that being available completely, it's open source. The public can see every aspect of that, right? And they can see every transaction that's gone through and every transaction that's been validated. All of the payments that are made from individual to user, or user to individual, or institution to individual, or institution to institution, doesn't matter who it is. Both the sender and the receiver, those aren't available on the blockchain network. So no matter what, even though every transaction has been carefully validated and stored, and there hasn't been a single transaction mistake since the beginning of Bitcoin's inception, all of that information is private. Also, this grants access for transfer of funds for people in sort of developing countries who may not have rigid and solid banking systems. And it also sort of crypto, one of the big selling points of crypto is that it has an unparalleled level of security in terms of interfering with transactions, double spending, forgery. None of that is possible because each individual cryptocurrency that's transferred, or Bitcoin, if you will, has its own unique set of ones and zeros which define its value. It's also programmable. So as Papa was talking about before, with the advent of Ethereum and its subsequent addition to Bitcoin, in the sense that you can add a smart contract to it, that makes it a programmable currency. And I'll just quickly delve into what that actually means. Basically, programmable, a smart contract is, let's say, this big computer program you establish around a certain amount of money, and that can be used to sort of determine what you want to do with that money based on a bunch of external stimulus, right? So let's say you're an insurance provider and you have an insurance policy with a certain client. In the case that you need to pay them out, what you can do is you can have a smart contract, and if they, in the incident that they unfortunately have a crash, what you can do is you can take external information, such as a police report from the crash, scan that police report, make sure everything checks out so that, you know, in the case that it doesn't, you don't pay them out. In the case that it does, those funds will automatically be released to them on the premise that their story checks out, and, you know, the police report makes sure that it fulfills all of the criteria of the insurance policy itself. Also, with regards to efficiency, obviously, something like a smart contract is going to introduce a whole new level of efficiency when you have that level of automation within sort of institutions. So yeah, basically, guys, that's pretty much it. Please don't hesitate to email us or give us a phone call. We're also on Collins Street, so do give us a visit if you need to or want to. Other than that, if you want, we are going to stick around for a couple of minutes, so please do post your questions up in the chat on the right-hand side there. And yeah, if you have some questions, great. If not, we'll call it a day.